Welcome back to Global Business Report. Nigeria's foreign reserves dropped by $4.45 billion in December last year. The figure was realized from the difference between $43.07 billion recorded in January 2019 to $38.61 billion in December of the same year. Now, the data stated that Nigeria's foreign reserves has kept a downward trend since the June 2019 when it dropped from the $45 billion mark in July to reach the $40 billion mark as well. Meanwhile, the central bank recently disclosed that Nigeria's dependence on crude oil for more than 60% of fiscal revenue and over 90% of forex earnings implied that the country's revenue and forex supply was exposed to shocks from the international oil market. An analyst from financial derivatives, Adam Okwesa, joins me in the studio for more on this. Adam, it's good to have you with us.
Pleasure to be here.
And Happy New Year.
Happy New Year to you.
All right, good. So, a depleting foreign reserves since June 2019. How did we get to this stage? What are the dynamics here?
Well, I think a key explanation for the downward trend in our foreign reserves is the fact that Brent oil on average is lower than 2017 and certainly 2018. Brent averaged about $64 per barrel in 2019 compared to about $69 per barrel in 2018. Another explanation would be the CBN's foreign exchange interventions, which has worked to keep the naira stable at all the windows, all the trading windows. CBN sold about $29 billion in from the January to August 2019, compared to about $22 billion in the same period in 2018. And you can see that this continuous downward trend in our foreign exchange, foreign reserves rather, is why, partly explains why two credit rating agencies, namely Fitch and together from stable to negative. It is clear that Nigeria's external balance vulnerabilities are growing. Now, to rectify this external imbalance, the CBN has two options. I think. Firstly, currency devaluation. Secondly, to continue with its import restrictions, continue with land border closures, and so on and so forth. For most countries, the obvious means to rectify an external imbalance would be to devalue the currency. But the CBN is firmly against that. You can already see that inflation is already running high. Social tensions are already high. If you devalue the currency, the effect on inflation, effect on consumer prices will be extremely significant. So you can understand why the CBN is wary of a currency devaluation. I think last weekend, the CBN came out with a statement saying that a currency devaluation is out of the question, effectively ruling out. I think the CBN released that statement to sort of assuage investor concerns, foreign investor concerns, who have been worried about this continuous depletion in the foreign exchange reserves and who sort of expect a sharp drop in the value of the currency. But the CBN has said no, that it's out of the question. That is out of the table. That's out of the question.
Good.
I think the CBN's optimism is based on the current level of oil prices and oil production. I think the esteemed gentleman that came on talked about what is happening in the Middle East. I think that is tensions are extremely high now. It went from 0 to 100 very suddenly. So oil prices are likely to inch up to $70 per barrel sooner rather than later. So with that, I see the level of reserves reversing its downward trend and increasing. But aside from that, net foreign exchange inflows into Nigeria should remain positive. Nigerian assets should remain attractive for foreign international investors, foreign investors rather, because of what is happening in the rest of the world. Monetary conditions are easing. And the CBN has already hinted that it will maintain a tight monetary policy stance in 2020. So that should boost investor confidence that Nigerian assets should remain attractive. So with that, all that said, I believe that the naira should continue to remain stable. I don't see the reserves falling to a level that isn't manageable. If oil prices reverse its current trend, I think what the CBN will do will to continue imposing more import restrictions.
Indeed, Adam, and to add to that, it's understandable when there are anxious moments, especially when the option of devaluation of the naira, because we've gone through that road a few years ago, if I remember recently, and unfortunately, it wasn't good for everyone in terms of inflation, hyperinflation, galloping inflation, everything just went up. So be that as it may, Let's talk about Nigeria's monolithic economy, as it were. Is that a direct correlation to the drop in reserves? Already, I think the CBN raised concerns of us, our dependence on oil all the time. So how would you explain that as well as part of this issue on ground?
Yes, you can see that the Nigerian economy is intrinsically linked to the oil markets.
Yeah.
We are so dependent on oil. Whatever happens, if oil prices are going
like
up...
putting your eggs in one basket,
exactly.
as it were.
The economy is rosy. Everything is positive for the economy. But if that reverses and oil prices decline sharply, if production declines sharply, then it's all doom and gloom for the Nigerian economy. And that is a very risky and dangerous game to play. We can't continue living like that, especially as oil as a resource is dying. Oil as a commodity is soon going to come to an end. We're soon going to reach peak oil demand. I think that's the term. So it's a very dangerous game to play. So we need, yes, efforts have been made to diversify the economy, but it's going at a sluggish pace. We're not doing enough. We can see this by the signing of the African Free Trade Agreement bill. Maybe that would
open up the markets. Maybe
that would bolster our manufacturing efforts, agricultural efforts. But the way it's going is going at a very sluggish pace. I hope we do more but the thing is that in order to industrialize the economy, we need to get one thing right, and that is power.
Yeah.
I think the president hinted in his speech that ongoing liberalization, the power sector will continue with its ongoing liberalization. I don't know if that is a hint that we should see cost-reflective tariffs in the power sector. I don't know, but we need to get our power situation sorted sooner than later. Because without power, we can't industrialize the economy.
It affects all facets of...
Without power, we can't even do agriculture properly too. Yeah. So we need to get our power situation sorted. We need to get our infrastructure situation sorted so that we can completely wean ourselves out of oil, because it's a dangerous game we're playing, to be honest, yes.
Indeed. Now, these falling reserves started since June 2019. Should Nigerians be concerned by this drop, and why?
I don't think Nigerians should be concerned, because if the concern is that if reserves decline sharply, then people will start speculating against the naira, speculative attacks against the naira.
Yeah.
But I think the CBN has said that it will continue defending the naira. It will continue defending the naira with its means. Reserves currently are $38 billion, the lowest since January 2018. All right. And like I said before, with current oil prices, I see that trend reversing in the next few weeks. Okay. So I don't think there's any need to worry about this.
But what if the trend does not reverse? Although there was a time someone was analyzing and said, okay, fine, by the time it reaches the 30 billion mark, that is the red line, that people should get a little bit anxious at that moment. So,
yes, that is the red line. But I don't think the CBN would allow it to reach that level. Okay. If it is heading towards 35 billion, what the CBN will do? Impose more imports restrictions, which is ultimately negative for the economy. But what else can it do? So
indeed, indeed, Adam. So there was relative stability on the fortunes of the reserves just before June. So what actually happened, and why did it just dip? How can that be sustained, that stability, as it were?
Well, you can say oil prices were range-bound.
Okay.
Oil prices were very muted, because at that point, I think that was when global trade tensions were at its peak. People were very pessimistic about the global economy, and of course that has an effect on the demand for oil. So that oil prices were very lackluster, trading very lackluster. So that is why, and compared to this time, June in 2018, 2017, oil prices were at a very muted level. So with that decline in inflows from oil export revenue, that is why our reserves turned started declining downwards and has maintained that downward trend.
Okay, hopefully something positive will be done about this because you don't want to scare away investors regarding all of this as well. Adam Okwesa of Financial Derivatives, I'd like to thank you for your thoughts on those issues. Good to have you.
Thank you.